Nathan Jennison here of the Mortgage Architects. And if you own a property and are looking to purchase a new one and move, you know how difficult this is. Ultimately, a lot of times you need to sell your current residence so that you can qualify for that new purchase. And you may also need to access funds from your current residence in order to close on your new purchase. All of this forces you to make offers that are contingent. And what that means is you're telling the seller, hey, we want to buy your property and we're going to be under this contract, but if we can't sell our house before we buy yours, then the deal is going to fall apart. That puts a high degree of uncertainty on your offer, and sellers are much more likely to utilize a contract offer that is non-contingent, even if it means that they're not going to get as high of a purchase price on their departing residence. So how do we leverage what we have in order to make you both non-contingent and be able to access the equity that you need from your current residence? Well, we're going to talk about the Instant Equity Bridge, and this is a program that we're going to use to get equity out of your departing residence so that you have what you need when you're purchasing your new home. You can combine this with our guaranteed backup contract, which we've discussed in another video. And so make sure to watch that. You can combine these two programs, including our cash offer loan program, all for your benefit and to make you in an extremely strong negotiating standpoint. All right, so this program is going to help you unlock equity early from your departing residence. You can access the funds from your equity in order to roll that over to your new home. Now, your departing residence can be listed, unlisted, or contingent. Any one of those scenarios, we can still use this program. There's no monthly payments due from this program, and the interest that is accrued from it is going to be due at the payoff of your departing residence. So when you close and sell your departing residence, that's when everything will be settled. You can, like I said, combine this with a guaranteed backup contract to make you truly non-contingent. This is another way that the Mortgage Architects will help you move forward, which means you're free to shop now. How does it work? Well, first off, you're going to get pre-approved with the Mortgage Architects, and we're also going to work on getting you pre-approved with the Instant Equity. So when you're doing that, then you can go out and make offers and negotiate from a much stronger standpoint. Once your offer gets accepted, then you're going to go through the loan process. You're going to close on the Instant Equity loan about 4 days before you close on the purchase of your primary residence, which would be the next step. Once you have closed on your new property, you're going to move and you're going to try to sell that departing residence as quickly as you can to just mitigate any costs of this program. So sell that departing residence, and then this loan will be paid off at the closing of your departing residence. And so that's where everything is settled. All right, let's talk about the cost of it. Now, reality is we're only talking and focused on the cost of this program, not on all of the costs associated with a real estate transaction. There's other costs that will apply. So keep that in mind as we go through these numbers. So first off, let's say that you're getting a $200,000 instant equity loan. That is the minimum loan amount using this program. In that situation, you're going to pay a 2% to 2.5% lender fee. And that's going to depend on whether or not this loan is landing in first position or second position on your property. Now, if you own your home outright, then this would be in first position. Or if you're getting an instant equity loan that is also paying off your current mortgage and then also giving you additional equity, that would be in first position. You would pay 2% of that loan. If you're putting this in second position, then you're going to pay 2.5%. Now, keep in mind that there's no payments on this loan, but if you have it in second position, you will still need to be making your monthly mortgage payment on your first position loan. Now, there is an interest rate associated with this loan, and it's not pretty. It's at 10%. Now, keep in mind, this is a short-term loan. Short-term loans usually have interest rates well over 10%. So this is actually relatively attractive according to those guidelines, but it's certainly not pretty, and it's not a loan that you're going to want to be in for a long period of time. If you're in this loan for 30 days, you can expect to spend around $1,642 based upon this specific scenario. There's also a 1% origination fee if you are not doing a mortgage loan of equal value to this one on your purchased property. The reality is that we at the Mortgage Architects need to be paid for our time. And so ultimately, if there's not another mortgage involved, then we would levy a 1% origination fee on this program. If we are doing your loan on the purchase, we would be happy to waive the origination fee for this loan. So the cost of this program is around $5,642 to $8,642 based upon the specifics of this scenario. Obviously, it would be different on your scenario, but this just gives you an idea of what it is that you're looking at. Now, keep in mind, all of this is one of the ways in which the Mortgage Architects helps you win, helping you negotiate from a stronger position, helping you navigate from one home to the other in a way that is as convenient for you as possible and as at a low cost to you as we can navigate. So there you are. In the meantime, please reach out to us with anything that you need. We're happy to discuss your specific situation and get you pre-approved. Until then, here's the legal stuff. We'll talk to you later.